We're going to take the discussion we've had so far to the international scene, where lots is happening. I think we can bring the guests who are joining online on anytime now. If you would, that would be great. All right, okay. So welcome back. We just had hi everyone on screen. We just had a coffee break, so people are still coming back in, taking a seat. So my name is Bertrand from Flashman. I'm delighted to be moderating this panel. I think it's a very refreshing idea that EUCI had to actually bring an international discussion into what is normally in Brussels very EU Brussels bubble centric events. So clearly a lot going on international level, which we'll hear about. It is my pleasure to introduce the panelists. I will start with, and maybe I can sit down, I guess. Tuang Lim, who is joining us from Singapore. Good evening, Tuang Lee, you're the Assistant Managing Director at the Monetary Authority of Singapore, overseeing regulation and supervision of capital markets there. You're also chairing the IOSCO FinTech Task Force, which is in charge of developing international standards for digital assets and decentralized finance. Thank you so much for being with us at what I think is 11 p.m. local time for you. Very, very appreciated. I think then 18 years behind you is Jason Mahoney. Jason, good morning, Jason. You are a special counsel in the Office of International Affairs at the CFTC in the US with a particular focus on fintech and digital assets. You also represent the CFTC at IOSCO. Closer to Brussels and joining, I think, from the United Nations office in Vienna, Michael Gromek. Michael, you're here in your capacity as co-chair of the Digital Asset Task Force of the Global Coalition to Fight Financial Crime. And here in Brussels with me, delighted to welcome you, Biba Homsy. You are a legal expert in the field of digital asset based in Switzerland, Luxembourg. You also are president of the Blockchain Association in Luxembourg, and you're one of 30 very special people who've been designated officially by the World Economic Forum as a crypto expert. So delighted to have you. And last but not least, and a very familiar face on the Brussels public affairs scene, my friend Roeland van der Stappen. Roeland, you're Vice President for Policy and Engagement in the EMEA region at Crypto.com, which is an international cryptocurrency platform with its roots in Singapore. So with that, we will kick off with a little tour so everyone can speak to what it is they're looking at in that space from an international perspective. And first, turning to you, Tuang Lee. Grateful if you could do a bit of a scene setting for us in the context of what the international standard setting community is currently doing and how it's reacting to market developments in the crypto markets. And I know you have a few slides to share, so we'll give you the floor for the next 5 to 7 minutes to set the scene and talk about what IOSCO in particular is doing. Over to you, Tuang Lee.
Thank you. A very good evening to all attending the conference. I'm very happy to be here. Thank you for inviting me. So I am Tuang Lee. I look after the capital markets in Singapore, heading up the capital markets group at the MES, and also, as mentioned earlier, chair the IOSCO FinTech Task Force, which was recently formed in March this year. If I can have the next slide, please. So I was asked about, thinking of international bodies. So on a global level, the IMF, IFSB are calling for more regulation of this sector. The IFSB recently published on 11 October 2 consultation papers on the international regulation, supervision, and oversight of cryptocurrency activities, mostly from a financial stability perspective. IOSCO's mandate is to explore investor protection and market integrity issues in financial markets. We collaborate very closely with the FSB on this. So I will just, can I have the previous slide? So I'll first touch on the work on the IOSCO FinTech Task Force, and then I'll later describe a little bit more about what we are doing on the crypto assets front and then on DeFi. So if there's time later, then I can share a little bit more about what MAS or Singapore is currently doing to regulate digital assets. So let me start with what the FinTech Task Force is doing on our school FinTech Task Force is doing. So if I can have slide 4. So as we are all familiar, events in the crypto asset space has been really turbulent this year. So merely a year ago, we see that the crypto assets valuation or market capitalization peaked at about over 3 trillion, but more than 2/3 of that has been erased. And it's sometime in summer. And then more recently with the with what's happening with FTX, is fallen further. It's now at about 800 billion. So top of mind is the most, of course, the sudden collapse of FTX. There are reports of allegedly lack of appropriate controls and governance. So there are also questions about broader impact of the what does this mean for the broader ecosystem or the crypto ecosystem. So these incidents clearly underscore the impetus and importance of work being done by our school, the FSP, and other standard setting bodies. So notwithstanding the scale of the FTX collapse, the good thing is that there's no indication there's any significant financial contagion or anything that spilling over to the traditional financial system. Nevertheless, we cannot take this for granted, as we know that anecdotally there are some increasing linkages that we see that may be forming. For instance, a major global custody player has recently announced or launched a digital asset custody platform, which allows for clients to hold and transfer cryptocurrencies like Bitcoin and Ether. And we know that there are new products that are coming out that are referenced to, for example, Bitcoin or Ethereum that may be settled in fiat currencies. So all these call for greater regulation of the industry and greater cooperation between authorities. And also from a financial stability lens, what are some of the things to look out for in case we see their financial stability implications going forward. Next slide, please. So I'll now give a bit more description to our work at our school. If I can refer you to the diagram on the right, the one with the triangles. So our school is the global standard setter for the international capital markets. So our school sets the objectives and principles along with supporting recommendations and guidance on how to regulate capital market activities and the associated risks. Our members will adopt these principles and distilling them into detailed regulations domestically. Internationally, the ambit of member authorities will extend to securities and derivatives markets. So our view is that, or rather our school's view is that the principles apply to digital asset markets or crypto asset markets. But in practice, we see that many participants are acting outside of or are in non-compliance with regulatory frameworks. So we recognize, therefore, that additional guidance may be helpful or would be helpful in applying our school principles to crypto asset markets in particular. And actually, they offer unique features, or rather that can be different from traditional securities markets, and this is what we hope to be able to give a bit more guidance on with the work that the task force is doing. So if you look at the left-hand side now, so in March this year, the ISCO established a board-level task force, or what we call the FinTech Task Force, with the aim of developing, overseeing, and delivering and also implementing our regulatory agenda with respect to fintech and crypto assets. So the mandate is a broader one. So we will also look at areas like subtech and data and AI at a later stage. But primarily for the next 12 to 18 months, we are looking at crypto assets policy formulation in general. And so we will also coordinate, as I mentioned earlier, with the FSP and other standard setting bodies on how we proceed with our work. The idea is to minimize overlap. So our focus is primarily on market integrity and investor protection, while the FSP will look primarily at financial stability implications. So the fact is that, well, as I mentioned earlier, there's not much financial stability implications at this point. However, we all know that consumer harm has occurred because we do hear anecdotally that people who have lost their life savings and people who have, significantly been affected financially because of the sell-off in crypto asset markets. So this is where we come in with IOSCO, the FinTech Task Force, where our work is particularly relevant given our mandate on investor protection and market integrity. So there are two work streams on the FinTech Task Force. So first is on crypto and digital assets. This is led by the UK FCA. Second, covering DeFi products and services, DeFi working group is led by the US SEC. So both work streams intend to publish consultation reports in the first half of 2023. So the CDA work stream will look at issues on fair, orderly, transparent trading of markets, market integrity issues, safekeeping, custody, and of course, soundness of some of these players. The DeFi work stream already had published a report earlier in March this year, which has established our thinking about what's relevant in the DeFi space. It will follow up to build on this report that was first published in March to look at what are the unique new risks that are emerging in DeFi. Survey is being conducted currently and there'll be more guidance on what practical steps and policy measures that can be taken to address risks that are more specific to DeFi. Can I have the next slide, please? So the developments in this year and more recent events have affirmed the importance of our work. So the risks mentioned here are some of the more pertinent ones that we just want to highlight for your attention. So we look at vertical integration of functions, conflict of interest, and lack of proper custody and segregation of client assets. So if I may just elaborate a little bit. So looking at the first issue on vertical integration. So we know that many crypto platforms have bundled together services, which are typically in traditional financial markets are kept separate. So this represents a couple of risks. One is there's this concentration actually incentivize this platform or some call conglomerates to take on financial risks that to support its own token, because you can some of the platforms actually provide exchange services. At the same time, they also issue their own tokens. So they could be incentivized to support their own tokens, and then by doing so, you could actually be financially weakened, and then failure of the platform could then in turn propagate risks to interconnectedness to other parties in the crypto asset market or the ecosystem. So secondly, the vertical integration also results in inherent conflicts of interest. Like for example, a platform can operate a market, and at the same time, some platforms conduct proprietary trading on their own account, or they have subsidiaries or sister companies that do proprietary trading. It is possible that the information of these, some customers actually may have their trades run by the service provider, by the exchange or the trading platform itself, or affiliates of the platform, and they may not realize it. So again, some platforms list their own tokens, and they may have certain buyers or to list their own tokens. So so some of these conflicts of interest need to be addressed. So this begs the question of whether crypto platforms should be allowed to continue carrying out multiple services within the same entity. So finally, custody and segregation of client assets are very pertinent. So proper bookkeeping, recording, and separation of client assets must be done, right? So that in a situation where the platform or service provider goes bankrupt or goes under, client interests are well protected, including protected from risk of hacks by third parties as well. So these are issues that are very pertinent, and I'm sure many of you are familiar with it. So actually, a lot of this, what we see here, existing IOSCO principles already apply. The challenge is in determining the right level of guidance to provide. For example, should we prohibit crypto platforms from onboarding affiliated entities as market makers? Should we allow platforms to list tokens where they have active interest in? Or if they do so, what kind of disclosures should they provide to investors that use the platforms? So we are constantly monitoring and closely looking at what are the developments in the crypto asset ecosystem. Of course, in recent events are important. So what we hope to do will be in our consultation support our recommendations to the use of case studies to make it a lot more salient and to make it a lot more applicable to contextualized to the crypto asset world. So looking at IOSCO principles and then applying them into the crypto asset ecosystem. So I'll just pause here and I'll pass the time back to
Thank you very
moderator.
much.
Thanks.
Yeah, that's great. Thank you very much. We can take the presentation off. We'll come back to you for a little bit more color on the approach in Singapore, and if we can bring up all the other panelists as well. We should move now. I'd like to move to Jason in the US. Jason, can we bring up Jason on the screen? Right, great. So. Jason, your chairman, Mr. Benham, has been quite vocal recently on, urging U.S. lawmakers to come up with development of a crypto regulatory framework. Could you tell us a little bit more about, how the situation is evolving in the U.S. and where the CFTC fits into this?
Sure, happy to. So first, I just want to say thank you. And hello to everyone. I'm sorry I can't be there in person, but unfortunately I was unable to. But it is a real pleasure to be able to participate, even if it's virtually. I do need to just briefly read a very, very quick disclaimer. And that is the opinions, analysis, and conclusions expressed here are mine and do not necessarily reflect the views of the CFTC's Office of International Affairs, other commission staff, or the commission itself, or the United States government. So with that, let me just get into it. First of all, just to level set, there are several federal and state financial regulators in the US, each of the area that we regulate. So to determine whether a crypto asset falls within the CFTC's authority, the CFTC conducts an analysis of the facts and circumstances underlying the individual crypto asset and its transactions. So things like, coin or token or currency or stable coin in the name, they're really not determinative. We do our own analysis. Crypto falls under the CFTC's authority in two ways. First of all, the CFTC has full regulatory authority over most derivatives contracts, and that would include derivatives involving crypto. So this means that we have full regulatory over things like Bitcoin futures and similar contracts. So the second way is that the CFTC only has enforcement authority over crypto that is a commodity. So what this means is that the CFTC does not have direct statutory authority to comprehensively regulate cash crypto commodity markets. Instead, we only have the ability to bring enforcement actions for fraud, manipulation, and various other market abuses. Now, on the positive side, I would say that we've filed over 60 enforcement actions in the crypto asset space at this point, which is a very significant number. And if you're interested in the details of any of these, they're all publicly available on the CFTC's website. There are some really good press releases that describe what was significant about them, and it links to some of the key papers in the lawsuits. So that's where we are today. But to understand how the US crypto regulatory framework is evolving from here, we really need to start with President Biden's executive order ensuring responsible development of digital assets. He signed the executive order on March 9th of this year, and it's a really important step in improving US regulation in the crypto space and filling in regulatory gaps. It's actually the first whole of government approach to examining crypto assets in the US. And the executive order calls for a number of reports examining various aspects of the crypto space. And there really isn't time to go into detail about all the reports, but they are public, and they provide the Biden administration's views on the appropriate frameworks and policy recommendations in the crypto space. Notably, they contain recommendations to Congress on steps that should be taken to improve the US regulatory framework for crypto. I just want to briefly focus on one of those, which is referred to as the FSOC report. The FSOC report reviews financial stability risks and regulatory gaps posed by various types of crypto assets and provides recommendations to address these risks. FSOC is headed by US Treasury and works to identify potential threats to the US financial system. Among other things, the FSOC crypto report highlights that the existing US regulatory system covers large parts of the crypto asset ecosystem, but it also highlighted 3 key gaps. And these gaps are, first, that the spot markets for crypto assets that are not securities are subject to very limited federal oversight. Second, crypto asset businesses do not have a consistent or comprehensive regulatory framework that can engage in regulatory arbitrage. And third, a number of crypto asset trading platforms have proposed offering retail customers direct access to markets by vertically integrating the services provided by the intermediaries. So how is the CFTC evolving in this space? Well, first of all, as I believe the moderator mentioned, the chairman of the CFTC is Roeland Benham. And as I mentioned ago, the CFTC only has enforcement authority in the crypto commodity cash market, but that the market is not comprehensively regulated by the CFTC or any other federal regulator. So one of Chairman Benham's key priorities is advocating for Congress to provide stronger federal oversight of the crypto commodity cash markets. And this is really important as it would fill one of the key gaps highlighted by the FSOC report. Now, Chairman Benham has stated in numerous interviews and in testimony before Congress that this is an area of the US regulatory framework that requires a congressional fix. He's really encouraged bills that contemplate shared responsibility over this space for the CFTC and for the SEC. So I think, some of the good news is that there are several bills currently before the US Congress that would provide this fix. With the election in November and the new Congress being sworn in next year, it's not clear what's going to happen to the bills. But I am really hopeful that one of these bills will be passed before too long, because there does seem to be bipartisan interest in new crypto legislation. And of course, with recent events in the crypto markets, there's really added urgency. So with that, I'd just like to say thank you for the opportunity to speak.
Thank you very much for this overview, Jason. Turn to you, Biba. So you're based in Switzerland, Luxembourg, but Switzerland, let's focus on that for now. I mean, much has been said about the attractive nature of the Swiss sort of crypto valley framework. What makes it so attractive when you compare it, for example, with what we're seeing in Europe with Michal or other framework you're seeing through the exposure you get to other legal frameworks around the world?
Okay, thank you very much for the question. I know I am in Brussels. I'm a little bit sick, so sorry for my voice. I have to say that I'm based in Luxembourg and I'm based in Geneva, which means that I don't have a bias of selling Switzerland, especially in Brussels. But I have to say that Switzerland had a comparative advantage. They took a stand already in 2018. You had ICO guidelines from FINMA saying what is a utility token, what is a payment token, what is an asset token. And since 2019, it did not change, which means that there is a certain stability in the approach where people can really say, okay, we have this approach, this is where we want to develop our business. And I think this is really important when you speak about business. You can incorporate a company while raising your capital in USDC, USDT, Bitcoin. You can develop your company with... The idea in Switzerland was that we're not going to change everything. We are going to see if all the laws applicable are still applicable for crypto. If yes, we don't change anything. And this is what happened. So basically, you still have, since 2018, the payment token, the utility token, the asset token. And every utility token actually are not falling under the regulation. Issuing a payment token is quite clear and it's not that difficult. And I'm gonna quote Julien, so I took notes of what you said. So about Mika, stablecoin, not a problem. Listing new coins, not a problem. More balanced and pragmatic, not a problem. Having a DeFi position, so for FINMA and for most of the regulators, or I spoke, the DeFi is still a problematic issue, and it derives from FATF guidelines. And FATF said if there is no influence, then we don't regulate it per se. So pragmatic approach, pragmatic in Switzerland. So that's interesting because you have Mika that is coming, has an advantage because it's going to be applicable. It's a regulation, so it's going to be applicable all over Europe, but it's going to be applicable in 2024, 25, when actually at the moment there are people looking to invest and to develop companies. So I mean, that's a challenge. There are really as a former regulator, I'm not going to say that you don't need a regulation. You do need regulation, and there are really benefits on regulation, but it's quite a challenge to do regulation when actually it's moving very fast, and with balancing all the interests, because this is MiCA. Then you heard about ESMA. It's going to be technical guidelines from ESMA as well. So let's say then it's 24, even if the guidelines are coming up, you are going to have also authorization from the regulators as well. So let's say 2025, 2026, and all over Europe, even if it's a regulation, which means that some regulators might have another view on the regulation. So quite an advantage for third-party countries, especially if you have reverse solicitation. I'm not going to say it's good or bad for EU versus Switzerland, because there is always the advantage of passporting, where in Switzerland you have the reverse solicitation we heard before. But I mean, if you're not targeting the EU, why are you going to EU? And Switzerland is actually a country that applies regulation, usual regulation to the crypto. If you have a payment crypto, it's going to be considered as anything that comes with a payment in general. So there are some advantage, at least stability, clarity from very long time.
All right, let's complete the tour. Roeland. So, I mean, okay, you're Singapore-based, but operating, pretty globally around the world as a crypto exchange. I mean, how are you going to navigate this still fragmented landscape for some time to come? And I don't know, do you see Mika as making your life any easier to compete in Europe or adopt standards that helps you compete outside of Europe?
Maybe 3 points. I think from my side, I think the first one, I think more in terms of context, that as Mr. Tuang knows, we have our global headquarters in Singapore, but we are very much a global brand with local entities. I think especially if you kind of are in the retail space, I think it's important to have local entities. We think a lot of legitimacy and trust comes from being compliant with local regulations and oversight. I think also a lot of regulation is still in development. Ourselves in Europe, we do have our virtual financial assets license out of Malta, which is mirrored on MiFID. We are registered in France and kind of made it clear that we want to have our regional headquarters in Paris. So we kind of see this as like really important to kind of play by local rules under a global brand. I think what we also expect is to see a lot of consolidation in the market as a result of trading volumes being down, the cost of business going up because of regulation, and we think that's also a good thing, and hopefully that also leads to higher standards across the industry. As Jason knows, we also have two CFTC registered derivatives exchanges. I think there's a bit of a difference in the retail and wholesale space. Well, in the retail space, we think it's important to have a local presence on the wholesale side. We do get obviously the necessary licenses, but I think there's more of a practice to rely on reverse solicitation as markets are more global by nature. I think, as I said, like regulation is more in development than fragmented. So the work that Tuang is doing in EUCI is important because we believe we need minimum global regulatory standards, but especially to kind of avoid regulatory arbitrage. As ourselves, we want to be anchored locally, but there will be players that may prefer to stay offshore. So that then leads to always the question on how do you ensure that level playing field between those entities that are onshore licensed and those that are offshore. And so the discussions we are having in Singapore is also around, you need to then make sure there is both the carrot and the stick. And for us, the carrot is if we comply with the rules around market integrity, retail investor protection, which are for us no-brainer and should be a norm. There should also be an opportunity to have what we call brand marketing rather than marketing of specific crypto assets and token to kind of make clear to customers or residents of a specific jurisdiction that those players have been vetted and supervised by the authorities. And at the same time, the stick can be, I know EUCI has also done good work in terms of they have an enforcement toolkit for online distribution of financial services to, for example, use the new technologies to curb and tackle misconduct online and potentially also use that to kind of bring down marketing of those products and services. And as Biba said, a lot of regulation, either one is in development or in the case of MiCA, which we do think should be a reference point, at least for rules for CASP or VES, or in Singapore we call them digital payment token service providers. Everyone has their own acronym. I think these rules should be broadly similar. I think MiCA is a good reference point there, but it will take 2-3 years before they're implemented. So it's also, I think the third point I want to make is on industry now to also take action, because in many cases we know what the rules will be. In terms of, for example, if I look at your slide in terms of segregation of assets, obviously we want to see legal segregation of assets. It's not something we can do as an industry, because that it would also protect customers in case of an insolvency of a specific trading platform. But segregation of assets, a lot of exchanges can and should already do that and keep them one-on-one. And that's why we also very much support the move towards transparency and showing proof of reserves, which I think is one measure where industry can lead and help restore trust. Another one is to double down on registrations and licenses. We have more than 100 already for ourselves for our main business line, the app. But I think that also facilitates dialogue with regulators and supervisors, because nothing is almost better than having local presence and local leadership and governance to have that dialogue, not only from a regulatory supervisory perspective, but also from a business perspective, because each market has their own specifics. But maybe I'll pause here and we can pick up other questions later.
Yeah, no, thanks very much, Roeland. Just to complete the tour and taking a slightly different angle on this one, but another global challenge, of course, as well. Michael, I turn to you. I mean, we're all seeing those constant flow of stories relating to crypto markets and in relation to also some of the scams, criminal activities, or sanctions avoidance concerns in that respect. I mean, you're an expert. What is, two questions, I guess. What is your honest assessment of the situation? How big is that problem? And as co-chair of this digital asset task force of the Global Coalition to Fight Financial Crime, which is public-private initiative, what are you hoping to achieve?
Thank you so much for having me. Very similar to Jason. You might see the UN background here, but of course my opinions are purely private, and they don't reflect on the opinions of Interpol, Europol, the World Economic Forum, and others who are members of the coalition. So thank you so much for having me. Let me maybe start very shortly to what I really like to do is to distinguish fact from fiction, because when we review different articles which are flowing primarily now connected with FTX, there is some kind of a feeling that cryptocurrencies are being used for scams purely. And when we reflect that on the reports that from blockchain analytical companies, we see roughly 14 billion US which is the size of scams connected with digital assets. So not only Bitcoin, but going above Bitcoin. It's roughly like GDP of Armenia. When we look at the size of the financial crime and scams connected there, it's roughly 800 billion, which is 4 times the GDP of Qatar or Greece. So then cryptocurrencies, even in the worst possible scenario, of course, we are aware that the data methodology is far from perfect, account for roughly 1.75% of financial crime in general. I have the feeling that when we have been reading news lately, we had so this was roughly 80 to 90%, but it's clearly not true. So that's very important to say that. What we are on the way to achieve, being historically a chief compliance officer of a publicly traded company with a CASP or a VASP, depending on the jurisdiction, I have been on the receiving end of the regulations and imperfectness. And I am reflecting on what Biba has said, that there is, of course, a delay between how technology evolves, which is global from day one, to how the regulatory development takes place as regulations remain national. I calculate quickly. So Satoshi paper is being released in 2008. Michal will be implemented 2025. This means we have roughly 16 years of a delay. This delay is nothing new. We have been seeing this delay in crowdfunding. We will see exactly the same in AI. We see the same potentially in metaverse. So together with 60 experts within the Digital Asset Task Force, we are doing our best to, we have 2 focus areas to work on best practices. On one side, more the regulatory angle, the top-down angle, to have a regulatory toolbox for policymakers to have a possibility to exchange their ideas primarily and purely connected with financial crime prevention. Biba, who is a member of the task force, can speak about this in just a second. And my personal mission has been to work on the knowledge base to make sure that policymakers, law enforcement, as well as member of compliance teams, both from traditional as well as fintechs, that they will find a place where they can have the best solutions like knowledge bites to come in and fill in the gaps. Because when I reflect on the development of ecosystem, which is a bit different, and we really think about different emotions, what I have encountered mostly when it comes to experts is shame. So people in key positions that are being asked to take certain decisions very often do not know and are not able to keep up with the development in the digital asset space. So we have to find a way to acknowledge this particular type of shame and then use the expert network that we have using best practices in order to provide like a fintech fighter knowledge hub to allow them to fill in those different gaps in the most hands-on way possible. And this is the mission that I'm trying to achieve together with the experts from the Digital Asset Task Force that we have discussed and decided on in Geneva as of July.
And just to follow up, you've got everyone on board, like from law enforcement to, crypto sector, NGOs in the coalition, and you think you can make it all work smoothly?
I think it's from my perspective, it's a beauty. It's a beauty in a way that, exactly as you said, we have members of compliance teams, that we have policymakers, we have law enforcement, then we have pan-European, pan-national policymakers, and it's a global coalition to fight financial crime. So we have a European chapter, an Asian chapter. So this gives us possibilities to understand which type of solutions are out there. Just 2 days ago, I traveled to the European Cybercrime Center at Europol, and we just went across the different solutions which are being now deployed to law enforcement agents, primarily with financial crime, connected with financial crime prevention. What works, what we could potentially enhance. As my idea is to collect all of those different initiatives, amplify them, and provide a structure for individuals working and fighting financial crime, to then go to those different initiatives. Very often we are duplicating what others are doing, but always when I travel, that everybody speaks about limited resources. So it's about amplifying and bringing everyone together to do the right thing. And we just started in September. I think we are pretty far. I would like to first disclose it to the members because we have a meeting in like 2 weeks. But I think there might be something coming to actually really provide hands-on supports and connect those different initiatives if possible.
Okay, great. But it is so important to your point, Biba, about there's another 3 years. That's an issue that came up in the panel earlier as well on Mika. Can we afford to wait that long, and what can be done in the meantime? Also bearing in mind, a lot of things are left at sort of national discretion. And Roeland, to your point on industry needing to get together, Michael, kind of getting those best practices from that perspective. So it'd be good to talk about how do we make it work from and Tuang Li, really to kind of help you also and your colleagues, and it's not just of course IOSCO, it's Basel, and as you mentioned FSB and FATF of course, and what are the the things that can be done, what are the problems that can be fixed or at least can help achieve that sort of international consistency, which for a global market with technology without frontier is really needed. I don't know if Tuang Li, did you want to say a few words about the sort of Singapore approach before we sort of move on to this and react to any of the comments that have been made so far? Can we bring back?
Thanks, Bertie. I think I'll just talk very briefly about Singapore approach. It's not different, very different from what Mika has done. We took reference from various jurisdictions when came up with our consultation. So basically our philosophy is we look through the technology, look at its underlying substance. So for example, ICOs, we look through and say that, look, if it's a security, but it's just applying a technology layer, we still regulate it as a security. So there's no, fundamentally, that's how we look at things. So when it comes to cryptocurrencies or digital assets, it really depends on what's the underlying substance. Is it a payment instrument? Is it a security? Is it a utility token? So for cryptocurrencies, we regulate them under what we call a Payment Services Act. They are essentially what we call a payment token, and we regulate them under that. Primarily right now, the rules are basically AML, CFT, and technology risks. So we'll come out with a consultation on investor protection and a bit on market integrity, as well as another separate consultation on stable coins. So basically, the risks are, across the globe, regulators are primarily, already securities regulators or conduct regulators are primarily concerned about consumer harm. So basically, in Singapore, we look at 3 angles: whether consumer access, whether consumers should be easily accessing these products or leveraging to invest in these products. So some form of customer assessment should be made, a risk assessment of the customer should be made. At the same time, we, as I mentioned earlier, there are conduct requirements as well. So should you, again, issues like asset segregation, disclosure, these are things that we have also implemented, or rather proposing to implement in the Singapore consultation. So so these are basic things that we hope to be able to put in place. Some basic guardrails to ensure that consumers' interests are looked after. At the same time, we have also another consultation on stablecoins, similar to what Michal has as well. Although we look at it slightly differently, we think that stablecoins need I think we're look at it very similarly. In fact, stablecoins need to be backed by proper reserves. Right? If you're going to call a stablecoin, you must make sure that they are properly backed by assets, and these assets must be of reasonable stability. Right? There are credit requirements that we put in. It has to be cash equivalents essentially. It cannot have too much duration risk as well. And also there should be disclosure standards on what stable coins, what kind of reserves it has, stablecoin has. So similar to what Michal has. So I'll just pause here and I'll pass the time back to you, Brian. Thanks.
Yeah. Okay. So thank you, Tuang. Let's spend the next 5 minutes, and then we'll take a couple of questions. What can be done? What are the things that are obstacles in the way of reaching international standards? And yeah, what should be done in the meantime, or can be done to help bring that consistency that as all the different frameworks are emerging around the world. I think Biba, you had some strong views on information related challenges.
Yeah, so when we were preparing the panel, I was speaking about the fact that if you look at the FTX filing from JS3rd, the filing, his declaration on the 17th of November, in paragraph 26, I leave you guys, you have all the internet, so check it. On paragraph 26, there is how Alameda was incorporated and where it was incorporated. So I'm not going to say the countries. I don't want to hurt any feelings. But it's basically all offshore, unregulated countries, which, by the way, was kind of funny because if you go into the regulator of Bahamas, I think now they took it down, but it was the first page was that they were the first regulator in crypto, and they were considered as the first one on the page. Anyway, what I wanted to say is that what is important, and now I'm putting my former cap as a regulator. When I was working at FINMA, I was in charge of the exchange of information among regulators. We were applying, and of course, Tuang knows about it, what it's called IOSCO MMOU. The IOSCO MMOU is actually a memorandum of understanding between the regulator to exchange very sensitive, confidential information to notably fight against market abuse, insider, and basically Switzerland was providing quite of information along to tackle this misbehavior. And Mika is actually tackling it as well from an EU perspective. What I found interesting is that there is a lot of energy from the regulators, from the authorities, to do a framework that is at least balanced, or try to be balanced, try to be innovative enough, but then you still do have jurisdiction that might be interesting for jurisdiction shopping. And in that sense, I think it's also important to work on a better cooperation. And I'm not saying that because I was a former regulator, but the IOSCO MMOU is really a success in terms of achieving a consistent exchange of information for misconduct and and giving really a playing level field for legitimate business with good governance, reporting, and so on. And I think this is important as well.
I hope you agree, Tuang Li and Jason. I know Jason. but maybe, yeah, sorry, Tuang, go for it.
Yeah, so yeah, thanks for mentioning the MMOU. I think it's a mutual agreement where we agree to share information. There's a requesting authority and there's a requested authority, and it goes beyond the securities as well. So recently we have shared our understanding that that there could be applications beyond what securities regulation or exchange of information. So that I would say that enforcement is an important area in the work that we do. So especially when we look at cross-border activities. So this is something that we I suppose rightfully very proud of, and something that we will continue to use as a way to exchange information and to mutually help one another in our enforcement efforts. Thanks.
Jason, clearly there's different approaches around the globe emerging, but I mean, from your perspective, it seems like it's also a little complicated, I guess, in the US at the moment. But do you see what are the main challenges you see for the emergence of these international standards?
Yeah, well, as we all know, these things are very cross-border. Some of the folks have already mentioned how they often move into jurisdictions that maybe don't have as advanced regulatory framework, and it makes it really, really challenging. I think the MMOUs that Biba brought up, Tuang Lee was just talking about, are a really important tool. I know for our enforcement division, we often have to go to IOSCO members for information or data simply in order to bring our cases, because all these enforcement cases, they have evidentiary standards. There's obviously a legal framework we're following. So we need evidence, and sometimes it's in a jurisdiction other than the US, or actually I should say it's often in a jurisdiction other than the US, or maybe some of it's in the US, some of it is in other places. And so these MMOUs are really, really, truly very, very, very important for us.
Okay, Mike, I think, Michael,
Yes.
you had your hand up, right? We can't, when somebody's
Correct.
speaking on the screen, we can't, yeah, okay, here we go.
I just wanted to reflect on the question that you asked of what we can do, because it feels that we are all aware of the different challenges. We will know that we know that harmonization will not kick in very, very quickly. But just yesterday at night, the Basel Institute on Governance as well as Europol, they have released a report which is called "Seizing the Opportunity." It's just a couple of pages of what they see what can be done, and I will just list their 5 points that they said that we should take action on, and I just would like to give very, very short examples after that. So what can be done is to break down the silos between traditional and crypto. Because this is something that it's very tricky for us primarily to manage. So we have been working in our different silos, and now, for example, within the coalition, we are trying to push those silos to try to understand what are the challenges that we can help each other to solve. Then make use of the existing laws. A little bit reflecting on what Biba said. Very often those laws to fit in, but companies will need to have guidance on how to connect DAOs or Web3 solutions to the current regulatory frameworks. The blockchain is a solution to disrupt organized crime. Very often in my blockchain-based investigations, and there have been many, blockchain has actually been a part of solution. So I have been able to visualize lots of transactions in a very short amount of time that were impossible with Swift. So what do we use, or how do we use this knowledge once it's being aggregated by different individuals? Raise crypto literacy to capacity building and clear communication. The United Nations Office on Drugs and Crime is exactly now doing a training where we train the trainers to help out further on to increase the knowledge in cryptocurrencies. And the fifth one, it was to increase public-private cooperation. And just to show you an example of just a recent development that is easy to remember and show the problems or like the challenges that are upcoming. By the end of October, Interpol has created a police station in the metaverse. It's in case you laugh now, it's fine. But then what has happened is that similar to other police stations where that has been already established in a metaverse, suddenly individuals started to come in with the avatars, which are partly anonymous, and started to report real crimes. So even though the avatar do look like dragons now and then, the reported crimes have been real. And this can be both a possibility for banks, for governments to have new whistleblower contact points. But on the other side, when we think about our silo way of one jurisdiction and regulation, then once this type of crime is being reported to the police station of Interpol in the metaverse, which police office is responsible? Which type of jurisdiction is that? And I think this is a very visible challenge of what we currently see as a development, where the market is going. And we still discuss sometimes crypto to fiat payouts and how many hops away this is an illicit transaction, it isn't. And I think we have to work with best practices and just pull together.
All right, thanks, Michael. I'm going to tell my son about the dragon. Roland, you wanted to react as well, and then we ask a couple of questions.
Yeah, I just wanted to make the point that in terms of promoting international consistency, also very much welcome the efforts of IESCO to kind of have one dialogue with industry and kind of coordinate already now, because we see a lot of jurisdictions discussing the regulatory frameworks at the same time as when IESCO is thinking about a minimum global standard. So I know a lot of time and effort goes into kind of working on the two parallel tracks. And in terms of what industry can do now, I think we can leverage the technology. So on the AML CFT side, we do have solutions like Trust, where crypto exchanges among peers work together to implement travel rule in key jurisdictions already, and we work with blockchain analytic firms already to mitigate risks. And I think on issues like segregation, proof of reserves, obviously there again we will leverage a blockchain, but also add third-party independent audits on top of that. And we continue to work with other trades on what we call, quite like it, open source code of conduct, because typically sometimes there is duplication in industry, but we want to make sure that the code of conduct that we develop can be adopted by even non-members, and then there's even a possibility for attestation on chain. So these are things we are looking at primarily first on the institutional derivative sides, but now also considering to do something similar on the retail side, because we know that rules will only be implemented in 2-3 years time, but we kind of already know to a large extent what they will be. So why wait?
Right. So no, that's really important to hear. I think it really goes to show that the industry is taking this very seriously and organizing, maturing, and also getting on with where the program is going. So I guess we have time to take a couple of questions if there are any. You again. He was quick. I'll take a question from somebody who hasn't asked a question yet first, but can we, Julien, did you want to ask one? Yeah. Can you speak loudly? I think that's fine. Let's take 2 or 3 at a time.
Thank you. Can I ask my question?
Yeah, sure. Go.
Thank you. So my name is Julian. I'm working at Ledger. And happy to have helped you, Biba, to deliver your message, actually, on stage. I didn't realize that you were from Switzerland when I criticized Micah, but otherwise I would have asked for a check before, of course. Yeah, so my question goes to Jason. Actually, my question, it's a very basic question, is about the utility token and the way the regulators in the US are dealing with that. My understanding is that the application of the Howey test can be quite broad. And my question is, if I'm dealing with NFTs, if, for example, my crypto trading platform deal with NFT, could I be qualify as a financial intermediary just because NFT could fall within the criteria of the Howey test? Thank you.
Now, Jason, while you think about an easy question, I'll get somebody else to ask a question. Can you introduce yourself as well, please?
Thank you, Christophe Bond, Swiss Finance Council. That's the joint EU office of UBS and Credit Suisse. Quick question. Well, thanks very much. Excellent to have a global panel in Brussels. Not often the case. There was a hearing in the Parliament last week on the FTX collapse, and one MEP made the point about reverse solicitation, saying that there is a loophole in MiCA because it will allow non-EU firms to provide crypto products and services to EU citizens without abiding by MiCA. And I wanted to ask you whether you think how big this loophole gap is and whether MiCA 2 will address it at some point.
Yes, I'll take two more. Can you decide which question you want to? I think clearly the first one is easy. Yes, we haven't heard you.
Yes, hi. Xenophon from Minatba, Xenophon Konturi from Minatba. A question for Michael, but everyone can answer this. We've talked about crime that comes from custodials and centralized entities, CASPs, VASPs, but how would you recommend that individuals that have been hacked from self-hosted wallets deal with these losses of funds? That is crime.
So stop looking at me like this.
No, I'm looking at Michael behind you.
I'm sorry.
So yeah, anyone can address this. What would you recommend? Is there anybody within Europol or Interpol that can address and collect some of these claims of hacks of self-hosted wallets?
Oh my goodness, there's loads of hands. I'm sorry. I mean, we're a great panel to move to as well. You already asked a question.
Yeah, I did.
You haven't asked a question yet, so you could.
Okay, thank you. I am Koen Vingerhoets, blockchain evangelist at Fujitsu. When hearing the Swiss regulation, it all sounds so easy. You have a payment token, a utility token, and that's about it, and you can go on. But the reality is that those tokens tend to get mixed functionalities. It's used for governance, it's used as a mean of payment. It has a utility too. You have to put taxes on top of things that can be used for buying vegetables, but also for paying for a restaurant or a taxi. How do you deal with that in a regulatory context if it's made complex by the industry to complain about a complex regulation?
All right, so we've got two questions around the regulatory framework and the challenges mentioned from Swiss and yourself at the moment. Jason, you had enough time to think about the response?
Yeah, unfortunately, it probably doesn't surprise you. I don't have a clear yes or no answer for you. You know, I think the best that I can offer you is that really, you know, the way our regulatory framework works, regardless of what you're talking about, whether it's an NFT or it's some sort of crypto asset or whatever it is, if it falls, you know, if you run the Howey test and it's applicable, you know, that's what it is. Now, that's obviously the SEC, but my point is only that the fact that it's an NFT doesn't give it a special analysis. You still have to run the analysis that you would for any other financial product that we have, and see whether it fits or not. And I'm sorry, but that's the best I can do for you.
All right, thanks, Jason. Michael, do you want to take on the question that was addressed to you, which I thought was addressed
Always.
to me?
Always, and please feel free to reach out, and I'm always happy to discuss crime-related stuff. When it comes to the hacks of self-hosted wallet, as I have not understood this 100% because the connection was not perfect. But when I paraphrase the question, then what happens? Which type of a body on the law enforcement side can take care of a large amount of scams or hacks connected with self-hosted wallets? Now I will just put on my investigator hat a bit. Usually hacks are the hacks. It really depends on which type of a cryptocurrency has been hacked and which type of wallet. There is still a possibility to trace those funds. You will for sure have members of blockchain analytics companies in the room, and they can explain this even better. There is a possibility to see where those funds have ended up, and very often they end up in exchanges. Then there is a need to reach out to those exchanges and then freeze those funds for law enforcement to, of course, seize them. For those type of individuals who have been affected, of course, they have to first report it to the police. In those jurisdictions where travel rule applies already, things might be a bit easier. on the contrary side, one of the key challenges that I have experienced is that this is a scammer or hacker network. So individuals have been hacked or scammed, and afterwards they receive a letter from a lawyer from a country X that says, I will recover your funds. You just have to pay $250 per page that I'm typing to a crypto exchange. Then they send the same documents to crypto exchanges, roughly 80 pages times €200. Then, of course, the customer is being asked to pay for all of that. And in case this doesn't work, there is another company which is then saying that they promise to recover those type of funds. So it is tricky because it's not only pure hacking and pure scamming. Usually it's entire network. It is more about raising awareness that this exists and protect individuals. We have not been as successful yet, and there is a lot of space for enhancements in this particular space. Yes.
Thank you. And then final words on the broader questions. I know to you, Biba and Roeland, and then we'll close.
Just one thing on what say Michal. There is also part of this global coalition company that is, and I don't have any interest on this company, but it's interesting. That is actually the business is recovering crypto assets, and I think this is also another part, which is very, very complementary to what we are trying to achieve with the global coalition. And for the other questions, so on the reverse solicitation, if you look at the debates with Mika, there was clearly an intention about speaking about third-party countries and reverse solicitation. But I mean, Mika, as we heard before, is actually based on the same thinking of prospectus, MiFID, even if it's separated, and all this kind of regulation, financial markets regulations, or directives in general. And it doesn't prevent for doing business. Which prevents is actually to do the passporting in the EU, but the reverse solicitation is another thing. I mean, if you heard about a company and this company has a website and you want by yourself engaging, that's another thing. It's not, MiCA is not GDPR per itself when you have to apply. It doesn't mean that it's going not to be, and it's probably something that can be thought about it. And I think you wanted to adjust something, add something.
I think it's a fair point that reverse solicitation is possible. So if I, for my own volition, wanted to be a customer of FTX, that could have been fine. Luckily, I was not. But for example, if a certain exchange has information in the language of the residents of that market, actively markets, that would be like in breach. And then obviously this is where we kind of want both, I guess, the carrot and the stick. So we would welcome through enforcement to kind of tackle that misconduct. Obviously, I think as an industry we need to think about, together with regulators, what is possible. I think we can use technology, investigative methods to address that. And then I think on the carrot side, so I think for us it's always important that players that play by the rules and the high standard that is set in each jurisdiction. And as I mentioned in the beginning, we operate locally wherever we market. I think brand marketing should be allowed, and it's kind of, I would say, almost similar in thinking to what you're thinking in Singapore on the stablecoin side. Like if it's well regulated, there is a label. I think people need to understand which players, which products are regulated and which are not. But I think it's still early stage to kind of have a definite industry solution, but it could be along those lines.
And to be honest, one doesn't exclude the other one. I mean, if you want to, it's exactly the same thing as the banking area, the funds area. One doesn't exclude the other, actually. And to answer your other questions about the Swiss regulation, that's the beauty of, and that's, again, me as a lawyer, that's the beauty of a thing, is that it's not only a utility token or a payment token. It can be what the regulators and the Swiss regulation calls it, an hybrid token. Then you need to adjust the regulation.
I'm going to close this panel. I'm sorry, Biba. And those, sorry for not taking all the questions. I hope you can stay for the drinks after and ask, continue to ask. Michael, I'm sorry, I can't really, I've got to close the panel. We're already 10 minutes late, and We've got another really exciting panel on greening the sector, which will have its own international challenges, I'm sure, no doubt, as well. But if I may just say goodbye and particularly thank Tuang Li for staying up past midnight, really appreciated. Jason, thank you for getting up early. And thank you all here for this really good discussion. Thank you.
Thank you. Bye-bye.
Bye-bye. Thank you so much.